Hello, you're listening to Ready, Set, Go Real Estate Investing Podcast, presented by Brandon Elliott. This show will be going over all aspects of real estate investing and is intended to educate, motivate, and prepare you to take action on your first or next real estate investment. For more information, please visit BrandonElliottInvestments.com. Thank you for listening and enjoy.
Welcome back, everyone, to Ready, Set, Go Real Estate Investing Podcast. I'm your host, Mr. Brandon Elliott. I'm excited today. As always, you guys know I'm based out of San Diego. We got my brother up in LA, just neighbors right here that we should have did this thing in person. It would have been fun. But what's really cool about Sief and what he's been doing with his team, he's got 60 members, a part of the team worldwide. They are in 8 different states, really taking over the market with short-term rentals. And they set up a short-term rental fund, syndication style, raised over $63 million for the fund over their rounds of raising, and just started in 2021, like towards the end of 2021. So just a few years into it, doing a hell of work here, bringing in about $12 million in revenue per year currently in these rentals. And there's a lot to be said with all of this. Like, there's a lot here. They got 90 listings that are live, 30 that are under renovation right now. And overall, it's pretty mind blowing because this is like the first of its kind. So, like, I've heard of a lot of funds out there, a lot of syndication styles. I don't know anybody else in the space that has actually set up a short-term rental fund. So because I own a bunch of, short-term rentals as well here in San Diego and in New Jersey, I'm just excited to hear more about this and greedily, take in as much as I can. But without further ado, Sief, what is happening, man? How are we doing today? You excited?
Good, Brett. I'm excited, man. You fucking put it on. Sorry, I should cuss on this.
You do your thing, man. You be you.
Your energy is just incredible. So, and I think just hearing some of those numbers, really kind of reflecting back, really proud of the team that we have and the investors that we're working with. But, we're trying to do some crazy things, and it's always fun to do the things that haven't been done before. So excited to be here and excited to share the story.
Yeah, appreciate you, man. So anybody out there that doesn't know who you are, where you're from, and like how the hell you got started into this, I would love to hear just that 30,000 foot view background of what you're up to.
Yeah. So, I'll kind of skip the whole like where I was born thing, but I actually went to school in San Diego. So for me, I'm an Aztec. And when I was there, I started a company helping people break into big tech. Pretty successful company back in the day. And then Facebook called and said, hey, why don't you bring those evil skills back in, internally, instead of telling everyone how to beat the interview. Flew me out and, I walked around campus, talked to a bunch of people, and I was like, wow, this is, it was just something like out of a movie, right? Like out of the future at the time. And I was like, I have to be here. So I ended up joining Facebook, spent about 5 years there on the talent recruiting side, ended up, hiring over 1,000 people, opening up offices. And biggest thing that I kind of took away is, with people, they often care about where they're going to go live and what they're going to do. It's not about trying to convince someone at the time to go work for Facebook. It was, that family of 4 in Dayton, Ohio. It's, why are they going to move to Boston? Why are they going to move to New York? Right. It's like, what's their lifestyle going to look like? The money was there. Right? It was just everything else, right? The questions. And so we used to do it back in the day is when we'd open up new offices, someone or people would actually like live in the market. Right. So I would live in an Airbnb for a week and then do a new Airbnb every week for 6 weeks in a single family house. So I could get a sense of what like living in Boston feels like.
Sure.
Right? And so you can kind of, craft the candidate experience, craft the compensation package, craft everything. So when you're trying to recruit 3,000 people to come work for Facebook at, insert city, you can answer these questions as to why it's a good place to not only work, but a good place to live. And what I learned very quickly is that these Airbnbs sucked. Really? Right. These properties are horrible at the time, and I'm just like, are all Airbnbs like this? And I was, I did it in several different cities and states where I was like, why are they so bad and operated so poorly? And, I was an LP in some multifamily syndications, and so I was familiar with the model, and I was talking to a few of those GPs and I was, why hasn't anyone scaled short-term rentals? And everyone thought I was crazy. They're like, you can't.
Yes.
You literally can't, right? Like it was single family homes. There's operational headaches. There's, why would you want to do that? Right. A lot of reasons. Right. And so anyway, I ended up meeting my co-founders and partners, Sam, Sabrina, and we overall kind of came together and said someone should try to scale this asset class. And actually what we started is by solving our own pain points, which was what do you want to buy? So we built software because what else would you do as two people in tech, right? And we built software to help us figure out what we should be buying as short-term rentals. And we got a couple of people paying us for the software, but as soon as they found a property, they would churn. And in software, churn and software don't go well together. That's a bad word in business, right?
Yeah.
So we moved over to a managed service. And, the story there is, people were essentially paying us to help us do all the work. And we were using our own tools. We had about 6 or 7 homes that way. And then what I realized on a Zoom just like this is everyone was so jealous of everyone else's property. They were like, dang, Brandon, yours looks great. Sief, yours looks great. Sabrina, yours looks great. And, I wish I owned that. And they were basically describing a portfolio that they each had a share in. And again, having been an LP myself, I was like, they're describing a syndication.
Yeah.
Right? And it would make our life 10 times easier if it was one to many instead of one to one with all these different clients and their different needs and all those types of things, right? So we brought up the idea, everyone went for it right away. 3 days later, we announced it to our community, some friends and family, and we raised $7 million in 30 days. Like it hit a nerve, right? And we were like, product market fit, as they call it in the tech world. And then our first year would go on to raise a little over 37.5 million, give or take. And then this year we're roughly sitting year to date about 26 or so. So we've raised about 63 million. We have about 120 properties that are either live, under construction, renovation. We'll do about, on our first 90 or so listings that are live right now, we'll do about 12 million plus a year in annual revenue for our shareholders. And we've already sent out $2 million to investors over the last 2 years. So, doing good, providing better experiences, and but more importantly, making sure that we drive shareholder value as well, right? In addition to everything that we're doing.
I love that, man. It's really incredible to think about like everybody's journeys of what you were doing. And then, you're working with Facebook, right? You got inspiration with them. You also learned how to hire on people. You were responsible for that. So then you starting your own thing and hiring on other people, like that's nothing new to you. You know how to lead and be the manager of that to be able to guide and set people up for success. So, it's just second nature. And then you actually get to experience being a partner in other syndications for real estate. You get to see that side of it, start helping people out, see the mess and the problems within real estate for short-term rentals. You're like, hey, this is where we can start solving it and systemizing your business instead of doing all one-offs,
I can't agree with you more. I think you hit it on the head. And, it's my team calls me internally, although my wife doesn't agree with this, just they call me the DM King. Because I purposely recruited our leadership team to who we are. And like, it's the one thing I will very non-humbly brag about is we have the best team in the business, right? Yeah. Like we have the right people in the right place, in the right roles, doing the right things at the right time in time. And I think a lot of that has to go, the work that all these numbers I'm talking about wouldn't be possible without them. Everyone from, John's our head of data, known as the Airbnb data guy. Josh is our head of operations, XPR Wharton. Mick's our head of asset management, Sief Khafagi, right? All of these folks are experts of their craft, and we wouldn't be here without any single one of them, right? So, although it's one of my biggest strengths, in my opinion, of being a recruiter and a leader in that general space, never would I, in a million years, assume that it would be the number one skill set I would have as a leader, right? Like anyone listening to this, if you run a business, hiring well is the number one skill set you could ever do as a leader. It's, hiring well, coaching well, guiding well, providing well. It's, at the end of the day, I don't even run the company. Right. Yeah. It's everyone else being responsible for their own world and giving people the right tools in the right places. And I know you probably read this 1,000 times in all these books and all those types of things, but in practice, people aren't formulas, right? And there's a lot of art that goes into it.
It's so true. I wasn't so graceful with my hire-ons over the years and had to, pay the price many times over. And I would say the last year, but specifically the last 6 months, as we've been growing our team, we have 22 members now, like employees of the business for Credit Counsel Elite. And I'm very proud to say, like, we have the right butts in the right seats at the right time doing these things. And I feel like the book Traction helped me out a lot with this, but there's no simple or easy way when it comes down to people. Like, they're all have their own type of situations.
Right here, right? So it's actually the most recent book that I read, if you can see it. But literally, I couldn't agree more. I had to hop off camera for a second because as soon as you said that, I was like, this was the book that I just most recently read, and how important it is to put those right people in those right places. And it validated a lot of things that we're headed to.
Yeah, no, it's incredible. It's like exactly what you need. We're actually hiring on just the other day we did an EOS implementer because it's like so crucial to just fine tune the business and to take it to the next level. So yeah, it's a good feeling when you have people that are way smarter than you and the best of the best in each, category. It's like, wow, the business is really running now.
Completely agree. I love it. Yeah.
So I would love to talk about, how you got that leader. You said you're DMing some of these people and getting them from social media, but leadership team, first off, like what does that consist of for you guys? How many people are on like your high level leadership team? And then how the heck did you get them through DMs?
So in terms of leadership team, we're a team of 12. You got Mick is your head of asset management. You got a head of finance. That's Corbin. Austin's our head of revenue. Josh is our head of ops. John's our head of data. Taylor's our head of acquisition, Brooks our head of PM, Andrew's our head of operational infrastructure. We've got 3 general partners. We also have our property management leaders, right? That's about half our company, right? Managing, all these properties requires a lot of operational infrastructure on a day-to-day, especially with short-term rentals. That's stuff we've obviously built up over time. And, honestly, a lot of them that kind of taking it a step back, I would say about half our leadership team we hired well before we needed them or knew what they were going to do. And I know it's kind of crazy to say that, but, a story that I often bring is, when we started, we were completely really tech data focused as much as we are today.
Sure.
And we had the idea that we would want to be, but when we met John, for example, who's our head of data, we didn't really have a need for a head of data. Like it wasn't a role we were seeking, right? It was, wow, this person is incredibly good at their craft. How could we bring that value to the business? Right. And I think oftentimes people, when they're hiring, they think inverse, right? They have a problem, they solve for it, they hire, it's reactive, right?
Yeah.
Or they're planning for it. And I think one thing that I learned at Facebook very early on, and granted, it was a huge growth time at Facebook, so I'm privileged to have experienced that. It was Facebook didn't really care about what they needed. What they cared about is hiring the best possible talent in the marketplace, bring them into the company, then figure out what the hell they were going to do from there. Right.
Yeah.
It was just hire literally the best, smartest, most creative, willing, passionate, driving forces in the business. Right.
Wow.
And like from there, figure it out. When we brought on, like I said, half the team, it wasn't like we needed them. Right. On the contrary, someone like Taylor, you talk about social media, Taylor's got, he's an ex-baseball guy. He was in sales. He used to own, he still does, but when I met him, he had about 2 Airbnbs. But dude was tweeting every single day about like baseball analytics of short-term rentals, right? Like the passion was there in every way. And it took me about 2 months of late night calls with him to try to recruit him because he actually was like, oh yeah, I'm going to start a fund myself. And I was like, let me tell you what it's like starting a fund and everything.
Yeah.
Right. I was like, it's not as sexy and as small as you think it's going to be. But anyways, it took me about 2 months to land him. And, if you ask him today if he'd go do it himself, he'd be like, hell no. Right. He's like, everyone's here. Everyone's drinking the Kool-Aid. But, social's there. Obviously, you got the whole LinkedIn. I would say probably 70% of our leadership team has been referred by another leader. Right. And so when we look for that type of thing, a big thing we look for obviously is culture fit and like kind of where we are. We're a very contrarian company. Everything we do doesn't really make traditional sense. We shouldn't be able to scale short-term rentals. We shouldn't be able to do the things that we do. If you look at data, we crush it by 70% of what's normal in short-term rentals. We shouldn't be able to do these things. And there's no difference there with the way we hire. Right. We hire the best people. We figure out how we implement, their strengths into the business. And really where we're at today, which really allows us to be in a position of power and leverage is now that we're here and we have this great talent, we can actually do these other things that we never thought we could do. Right. If we have a business problem or a curiosity question, we can actually go tackle that because we have the right people here at the company.
Yeah, that's so good. I love that. And obviously you guys have a strong vision to get everybody on board and want to be a part of, the change that you guys are really making, being the beginners of breaking into this industry so big like this. What does it look like for you guys? Like, what are you guys trying to accomplish in the next couple of years?
Yeah, that's a great question. Actually, kind of to note on that, one of our leadership principles is literally drink the Kool-Aid, right?
Yeah.
And,
the core value, it's mandatory.
It's mandatory. If you're not drinking the Kool-Aid here, like it ain't the right place for you. Right. And we're okay being that kind of company, right? This isn't just a job, right? Especially in leadership, right? It's you need to lead with empathy, with energy, with clarity, with context, right? And if you don't believe in what we're doing, that's totally cool. Just probably not the place for you to be here, right? And so having that kind of feeling all through and through is absolutely a part of our vision where we're headed. So to answer your question, we believe this asset class is pre-institutional. It's been historically hard to invest in. It's been historically hard to scale. And it's really never seen a level of professionalization until really us, right? And the first iteration of that was kind of your property manager, right? As a property manager like Mikasa who would come in and they would manage your property. Our belief, and so far we believe we've proven that thesis, is the alignment between a traditional property manager and a non-traditional property manager. For example, like us, we're vertically integrated, is actually fairly misaligned, right? The property manager doesn't care about the same things that you as an owner care about, like profitability, right? In our structure, we are the GP, we are the property manager. We give a damn about the profitability because that's how we make our big bulk of our money as well, right?
Yep.
And so by owning the stack, we've really aligned interests across the board. We've applied our own technology, our own machine learning, and our own quote versions of AI that allows us to predict what revenues will be, what's working in the marketplace. We collect, millions and millions of data points on a monthly basis and underwrite hundreds of thousands of properties, understanding what works and what doesn't. And we lead with data and technology like no other business does. And the reason we have to do these things is because of our scale. Your average consumer isn't going to go out and buy 200 properties this year for a short-term rental unless literally they're funded by, a significant amount of capital. But for us, we needed to be able to solve for those scale challenges. And therefore we built these tools, and eventually these tools will be able to be licensed out and offer to the everyday consumer, whether it's through the tool itself or through one of our services in the future, right? And it may be through one of our subsidiary brands, but our belief is that this industry professionalization is good. It's good for the owner. It's good for regulation. It's good for cities. It's good for guests. It's good for everyone. It's about time that someone take that approach.
I love that. I really do. And I think the big question here that a lot of other institutions and fund managers have kind of stayed away with is all the legality when it comes down to, the different states. San Diego just this past year, made certain requirements and they were threatening it the last couple of years, but finally it went into play, that you have to be registered and all this other stuff. So, and there's plenty of other states or counties and areas that are doing the same. So, those changes, it kind of puts a little bit of out of your control to a certain degree, unless you have a very strong pulse on the market and the politics and so forth. So it's a big, I wouldn't say like a bold claim, but like it's a big, I wouldn't even go risk factor. It's just one of those things that like you guys are jumping in head on when a lot of other people would be scared to do those things at a grand scale like you're doing it. So kudos to you for it. Talk to me about what does this actually look like though, internal for the team of like, scratch your head, pulling out your hair of like, holy shit, what's going to happen next? And how do we actually stay on top of this?
Yeah. I mean, on regulation itself, it's certainly a risk. We are a pro-regulation company. We believe in regulation. And we hedge actually fairly well against it. For example, in one market that we invest in, $3 billion worth of short-term rental income and taxes drive roads and schools and all those things. I don't care what you tell me, $3 billion is never being replaced there anytime soon, right? Yeah. It's also a second destination type market, right? And another one of our markets, which is a little bit more metro, right? It's a state law that short-term rentals are by right and that only HOAs can actually, tell you no. So we're not buying in San Diego and New York and Los Angeles and Miami. First and foremost, the numbers don't make sense, right? In terms of what you can do. We also don't compete with hotels. Our average property is a 4-bedroom or larger with a pool on a reasonable sized lot that we're amenitizing and building a pickleball court and a basketball court and bowling. And like, these are not things you're going to do in your high rise in downtown Miami, right? Yeah. You're just not going to get that. So the ways that we differentiate ourselves inherently reduces our risk of regulation, right? Not to mention the markets that we're buying, not to mention the types of assets that we're buying. We're not even buying starter homes, right? And everything that we do from a renovating perspective is also typically purpose built. We spend $150,000 plus on a renovation, including furniture design and everything in between, right? Like we are purpose designing and purpose building for the product that we're doing because we expect to own this asset for the next 4, 5, 6, 7 years And we're positioned and willing and ready, if needed, to hold this forever if we had to, right? That at that point makes you a seller that's never scared, right? Yeah. And the worst thing you want to be in a market of real estate, especially when shit hits the fan, is a scared seller, specifically on the debt side, right? All of our debt is fixed for a decade or longer, and we can refi within a decade very comfortably. If you look at history, never had a time in 10 years gone by where rates haven't fluctuated up and down, especially to a favorable point. So unless history does something it's never done before, we should be all right. So, that in itself with, obviously operating Airbnbs, you got regulation, you got renovation, you got permitting, you got neighbors, you have guests, you have the illusion of parties, you have maintenance, right? What we do is real estate, but really it's primarily business, right? At the end of the day, because you're operating a business outside of a property, right? And the property itself is the foundation, and you've added value through these renovations and these value adds. And our team is incredibly good at understanding ROI down to the T. We can tell you if we do X, we should generate Y, and that is tracked meticulously. Every decision we do, and fun fact, in our first fund, we were spending roughly $110,000, give or take, on average per property in terms of like renovations, furniture, and fixtures. In our second portfolio, we're spending, $40,000 more, if not even more than that, sometimes per home. And, sometimes people look at that and they're like, well, why? Right. And well, the data shows it. We grossly underestimated the amount of revenue that we could drive with the type of renovations and design and amenities that we put, a hot tub, a pickleball court, bowling, outdoor bowling, mini golf. I mean, I kid you not, our homes do oftentimes 2 or 3 times the amount of revenue in the same market as a comparable home based on the value that we're doing. So everything's meticulously tracked and there's data behind the decisions.
I love all that. And that's why KPIs and really diving in, being the tech company that you guys, kind of the background, really the foundation that you guys have, it brings in the smart guys that can really have the data to drive all your decision making, which that's how successful companies truly, thrive. So you guys are literally building renovations, adding a bowling alley.
Oh, yeah. Yeah. That's like an indoor bowling alley, right? And you got like pickleball courts. We've done a golf simulator that's done really well. In one of our markets, we do custom built bunk beds into the wall for kids and like dual slides coming out of it. Yeah. Right. So that they, it photographs well, it's fun. You got to know your avatar, right? And I can go back to why we believe professionalization is really important in this space is, most people amenitize and design a short-term rental for themselves because it's their second home. Right? They're not thinking about who's coming to this market, right? And if you're starting any business, one of the first things you should ask yourself is, who's my customer? Yeah. Right? Yet in short-term rentals, no one is asking who's my customer because in their head, their customer is themselves, right? I need to design and amenitize this house for myself, my family, my friends, because we're going to use it a week or 6 weeks out of the year, whatever it's going to be. And that's why we want to buy it. However, for us, we don't think like that. We're never going to use the house, even though our investors can. We're designing it we know that this market is going to be typically groups of 8 with 2 kids at this age looking to celebrate this or go travel for this reason. And here's their, needs and wants and what things should look like and how things should work. So inherently, when that person is looking for the property on Airbnb, it's no surprise that we rank twice as much, right? In terms of views, we get 25% more clicks, 25% more bookings at a 20% or better premium. Why? Because we're serving the audience what they need. In fact, what I just described is exactly like ranking on page 1 of Google. Yeah. It's not rocket science, right? Yeah. But on Google, you're competing with billion-dollar enterprises, right? Of like, we're trying to rank ahead of you depending on your niche and your business. On Airbnb, I'm competing 99% of the time against someone who doesn't even know that this is possible.
Yeah, the mom and pops that are setting it up for themselves. Yeah, exactly.
And with all due respect, I want to make sure that, I have nothing against mom and pops. I think it's an incredible business for them and what they're doing. And, I commend them for the efforts and the value that they bring to communities. It's just about understanding the game and understanding the business, right? And that's an area where we have a strict advantage in.
Yeah, no, like I'm that person, honestly. Like I'm the mom and pop that we have like, a dozen plus Airbnbs, but we are not setting it up. I'm putting my own finishing touches that I think would be nice, but with no goals or plans of ever staying in any of them. But I don't think about the the end user as much as I should, and doing those little tweaks to be able to get that premium. It's a no-brainer when you say it, and you it's the data that can drive all of this. And it's very common sense when you practicalize it,
It's crazy because you brought up like the user, and it's because we come from tech that we think about the user journey, right? And it's not common in real estate to think about the user journey, right? Even in multifamily, which I'm an LP in probably like dozens of syndications at this point, can't count. But it's when I ask the GP like why they're doing, for example, renovations the way that they are, they're like, well, the one three streets down did it like that.
This is the standard. This is what these guys are doing. Yeah.
And I'm like, cool. Like you have a cookie cutter approach, and it works for multi, right? Like I get it. But I'm like, okay, but who is the user? Right? Yeah. Who's the those things, and it's just such night and day difference between these asset classes. Which again, I'm not an expert in multi, which is why I will never get into that space. But I'll happily give my money to someone else.
Yeah.
Right.
I love that. I'm the same way. That's so good, man. I really do love that. I think that tech background, just like you said, it's like you guys are always thinking about the end user. So it allows you to really thrive in many different ways with this. Very cool, man. So when it comes down to property management, you mentioned, part of the team, you guys brought that in-house to really have that control and to give a shit about what the outcome is, which is pretty crucial here. I'm curious about cleaning crew. I know you guys are in several different states, so maybe that isn't in-house yet, but curious what that looks like, as well as construction. I mean, you guys are putting a lot of money out there to be able to, like, you guys are building some wild things and making a really entertaining, platform in place for people to enjoy themselves. So are you guys have plans, or is it in-house already? What does that look like?
Yeah, great questions. So as you might imagine, scale matters a lot, especially if you're talking about those things, right? And when we first started the company, we never had plans of being vertically integrated. We actually were forced to be vertically integrated after the providers that we picked didn't meet the demands that we were looking for. And, we were sitting there, we were like, shit, we just raised, I think at that point, like $7 or $10 million. And all our service providers were like, we don't do that anymore. We don't want to do that. I'm like, what do you mean? Like, we signed a $25 million engagement to do this. And they just said, well, we don't want to. I'm like, well, we can either shut down or we can build it ourselves.
Yeah.
Right? And so we ended up building a bunch of the operating side in our OpCo-PropCo model. So we do it ourselves. So kind of to answer your question, depending on the market, it depends on what we own or what we outsource, right? So really in bulk across everything, we don't own cleaning. We don't have any intention of owning cleaning anytime soon. Although obviously as scale changes, those questions are always asked in terms of unit economics, but it doesn't yet make sense to own the cleaning company that also cleans the properties and knows people on salary and W-2, right? So you're still contracting out to a partner to do those in each market. On construction,
I have seen on the cleaning side of other friends of mine that, man, that is a business that can be very lucrative as well, honestly. It's a lot of turnover and trying to find really high quality people. But if you can control that aspect, it's one of the first things that I noticed besides, like you said, property management, because everybody's jacking that up. So
On cleaning, I would agree. It's just one of those areas that it's a completely different economics of a business rather than like the tech forward approach that we take in a lot of things. And it's not something that has made sense for us to do just yet. And so on construction, we don't own our own construction, but we do have a GC in-house that obviously allows us to lower the cost of construction because we act as our own GC really across most markets. Although construction is in talks right now of us to bring it in-house or actually have an eye on a target company that we may acquire and obviously spin up those locations in the markets that we're in because we have that density and scale. So that's something that we're considering. However, the things like maintenance over time, we have 3 main markets where we're in today and then kind of tier 2 markets as well. In our 3 main markets, as of last quarter, we did bring on in-house maintenance, in-house market managers, right? Because you start to get density. You have 30 listings in a specific market, it actually makes a lot of sense to bring in maintenance in-house rather than paying that service call every single time you have something happen, right? Short-term rental is kind of high. So, my point is, like, in every part of the business, there's an inflection point where you start to ask yourself, do I hire out or do I do it myself? And what's the time cost, the cost of people, the cost of technology, the cost of labor, all of these other things. And, each part of the business is a little different. We're not there yet on cleaning. We're not there yet on construction. But I imagine in the future, especially to continue this pace, we certainly will be.
Yeah, I love that. I mean, there's levels to everything. There's certain ceilings that you guys will get to. And especially with the goals, the amount the fund has naturally just hit a chord with so many people that have trusted in you guys to take this to the next level. So I'm sure there will be a time, a day, and a place for all that to. And the cool part about it is that you guys have that ability to branch off and to have something greatly successful in all of those categories. Like a cleaning crew could be greatly successful, turn that into millions of dollars on its own, as well as, the construction and so many other, platforms that can kind of branch out from that. So it's just funny, like when you first start off and you realize the need for the management, I'm starting off, it's like, well, that's a mandatory. We have to, because these guys are all doing horrible here. So love it though.
And you start to see it pretty quick too, right? It's, we built our company very much like an onion, right? Where you could own the entire layers. It's really just about what layers you want to own and why. And I think for us, it's about deriving shareholder value, right? Like if we didn't own the real estate with our investors, I don't know if we care to own maintenance. Like give you an example, in the fund, we don't mark up, the cost of maintenance, right? If you go to a company like Vacasa and this is probably a shocking one, 55% of their revenue doesn't come from property management, even though they're a property management company.
Wow.
Right. It's because they're marking up services to the owner based on their labor costs and these types of things. Right. And it's because we're owners directly. Right. We don't care to, upcharge this fee in order to drive revenue to our operating business. Right. What we do is we're very much in line with the company. It's a direct cost. Right. And therefore, there's incredible shareholder value that's being driven to our investors. And of course, for guests, you have someone who can fix things on the spot, always on call, those types of things. And over time, these things make sense. And I think one of the biggest things we often get reached out to is like, hey, will you, property or asset manage for us? And, we're not doing that today, but we do have the ability to go do these things for other people with the data and the technology that we have, especially through subsidized costs, which allow owners to deliver a much better experience for both themselves and guests in the future. And those all things also give us data, right? As to like what's working, what's not working. And at the end of the day, today we have access to, I can't even tell you how many millions of rows and data points of data, right? It's raw data across the country. But even with more data, we're able to derive better investment decisions as well as better revenue decisions.
Wow. I love it. So with these properties, you guys are owning these, right? You guys are buying these, and are you buying them distressed or straight off the market?
Yeah, it's a good question. We rarely buy distressed. I would say our two top sources are going to be either on market or simply just off market, because we've bought enough there that people are just like, hey, do you want to buy ours? Or hey, it's on, before I bring it to market, do you want to buy it? Because we bought 3 others that on these 3 other streets. It's funny, in Scottsdale, for example, is a market where we're in. It's like as you walk each street in the neighborhoods that we buy in, it's like, oh, we have one here, one here, one here, one here, right? Yeah. So we got 2 on this street. And like there's areas that we buy in very specifically. We haven't gone after distressed primarily because our buy box is very unique, right? Mm-hmm. And, we've had tons of people that contact us about distress, and they're like, hey, I can get you 30 properties in this one transaction, right? And that's great, but maybe one of those properties fits our very unique buy box in that market, which is, let's say a 4-bedroom with a pool on this acreage of a lot in this area of the map that we really want to favor. And there's reasons for that.
And that's why, that's what the data tells you is going to be your best. So you're not going to get any of the other BS. You don't want a 2-bedroom or a 3-bedroom. Sure, you could make it work, but that's not going to be your ideal avatar and everything else. That's not what the data is telling you.
Correct. So therefore, buying a distressed portfolio doesn't really work for us. If someone gave me a distressed portfolio of the exact type of properties we're buying in that market, I'd buy it all day, right?
Sure.
But it's highly uncommon, right, to find that type of product at that level of scale and volume. So our acquisition strength also is in that we underwrite, I think, at this point, probably 100 to 200,000 properties a month in about 257 local markets across the country, which is where we have an interest in buying. But we've only really entered 10 markets, and we have 247 other markets where whether we have quantitative data, qualitative instinct that we might want to enter, or something is telling us we should continue mapping that market. For example, market we're in Florida, we didn't enter it for 7 months because we didn't have enough data to actually understand it, right? And then what we saw is as prices compressed just a tad, and then we had enough data that validated that we could actually enter this market because we've been mapping it for 7 months, everything that hits the market, because it's not just about short-term rental supply. It's about physical real estate supply, right? It doesn't matter if, I know in this market, this type of property works out really well. It also matters that I can be able to buy enough of that property in that physical real estate world, right? So how do I mesh this world with this world and then operate on top of it with everything that else that's regulatory and renovation and labor, right? You're building almost like these mini businesses that need to have all of those things each time you stand up a property, and it's not easy at all.
Are you guys doing cost segregations at all on these properties?
Oh yeah. Every single property cost seg, 100%. Every single property that cost seg.
Smart man. Cool. And then I would love to hear a little bit more about the funds. It's incredible. The first raise, it was 7 million very quickly, and then to 30 something. And, it's just amazing. So I really love how you guys have done that. Curious, before we got started, you said there's kind of like 7 different classes of the share type and then feeder fund, stuff like that. So just curious if you could expand a little bit more high level thinking as somebody might want to start their own fund out there, and how the hell you did it, man. That's what I'm curious about.
So yeah, I mean, I can't take credit for all of this. It's
of course,
the team, right? But our strategy was simple, and I'll kind of give you the marketing behind it. What we realized we had was something that was super unique. As you said at the top of this call, right? You really haven't seen short-term rental funds. But if I asked you how many times you've seen a storage deal or a multifamily offering or any of these things, and what do they all look like? Metal box or a furnished apartment room. It looks common. You see it every day. You almost become desensitized to it. So for us, we attacked the syndication world, right? We said, hey, this is new, but it's the same exact thing you're used to. Right? It's the same exact structure, just different asset class. And you had sexy photos that didn't look like a storage box, right? Because our content, our properties are marketable. They're sexy. You don't see that typically in apartment buildings and storage units and RV parks and these things that are more common asset classes. So we did that. We went on podcast tours, right? We did all those types of things. We spend a lot of money on, socials and getting the word out there in conferences, and we built a brand around being the leader in the space. If you want to invest institutionally type in short-term rentals, we are the go-to choice. But also just traction, right? Sharing our revenue numbers, going after fund managers. And you talk about someone who wants to start a fund, with us, you can make 2 to 2.5 times as a fund of funds working with us than you would make working with a multifamily operator. And the reason for that is we have better margins, right? In terms of what we can do on the specific asset, which we can pass through, right, to the fund manager for anyone who's looking to invest, with that. So it's getting a lot of people excited. It's also educating them about this asset class. It's also, generally something that hasn't been done before. And look, we get the risk. This is something we tell each and every one of our investors. We are shooting for a home run grand slam outcome, right? Package this portfolio, sell it off to an institution, and that's a grand vision. But we also have hedged almost all the risks that we can, which is we have fixed rate debt for a long time. We buy well, we buy responsibly. Our DSCR 3X, which is 2X that of multifamily deals. So we can hold for a really long time if we need to, and maybe we hit a double if we have to. Right?
Yeah.
And so, understanding and sharing that vision and being the authority in that space has really helped us. But, anyone who ever wants to raise money from investors, and disclaimer for us, of course, we are only accredited. So we only work with folks who are in the accredited space. But, you've got to be able to share a mission and a vision that is almost bigger and greater than you are in terms of what you're building. And I think that has served us incredibly well. And it's really hard to do that with multifamily because you're so desensitized to it. Every single deal, right? It's about the deal, not about what you're doing in the business side of it in the space. And that's why we like open-ended funds that are not asset specific, but are business vision thesis, right? It's like, here's what we're doing in this space, not just buying this singular asset.
I love it, man. I'm so pumped up for you guys. I think it's just incredible. So Dude, I don't even know where to end, how to end this. I want to keep going. So where do you guys see yourself in the next few years? It looks like you want to kind of, if possible, somebody wants to buy you out, you guys would do that. But otherwise, you have multiple backup plans. You guys are getting a huge ROI for your investors, tax benefits as well. So it's just a no-brainer in so many ways.
Yeah, I mean, our mission is very simple, right? It's to democratize the asset class in as many ways as we can. Yeah. And what I mean by that, it's about access, right? For someone to go do this themselves and, they have a family, they have a job, they have hobbies. People underestimate how much work short-term rentals are, right? And it's sexy, yes, but like most people don't have the capital, the technology, the talent, the traction, the data to go do what we do. And so by being able to offer that to folks is our number one mission, right? So to be able to go in and continue to do what we do. And in parallel to that, we serve two people really primarily, right? It's our investors, but it's also guests, right? And it's delivering incredible guest experiences. And I'll never forget, there was the first time I got a photo from one of the cleaners in one of our homes. We had a whiteboard in there, and this little girl took a picture with her and her grandpa next to the whiteboard. And all it said on the whiteboard was, "Thank you for all the games. It was the most fun I've ever had." And It was just like that little feeling, right? That's like, like every time someone goes to an Airbnb, and the reason they make that choice with their families for having these memories and these good times, and something so smaller, these games that we offered her in this home that she didn't have to think about, that she can play with her grandpa and really have that amount of time. We serve that every single day, right? We are nothing without our guests. We are nothing without our investors, and we were able to bring that together in a beautiful blend of synergies. And so we continue to drive the guest experience forward. We are always making it better. We automate a lot of things on our end, so we have less mistakes and less things that we miss, because inherently speaking, remote management is not an easy thing to do, right? Yeah. So we're making improvements in technology. And what's awesome is, as what we've learned, is all these things that we continue to build for ourselves. And the more we talk about it and the more we share it with folks, we learn that the same pain points we have is the same pain point that you have, just on a smaller scale. I bet you if I asked you, Brandon, do you want more bookings? Do you want more revenue? Do you have issues with your cleaners? Is maintenance a pain in the butt? Every single one of those would be like a resounding yes, because we know the pain points, and we're building the tools, the resources, the layers of the onion that we're using ourselves, because we have to build it for ourselves to run and operate, that eventually we hope to offer those same tools and resources either through products or through services through one or more of our other subsidiary companies in the future, that would allow other folks who, still want to be in that active management space to have choice and better perform for themselves, their family, but also for their guests that are staying there, right? And that's kind of our belief in the professionalization space. And that's where I think we're headed over the next couple of years. I think an exit is inevitable, right? I think at some point you get to a certain size where institutions, anyone in the space 3 or 5 years from now wants to buy 500 short-term rentals in a portfolio, there's not going to be many options. And really, we're going to be the leader in that space. And whether we fractionalize that or hold them forever, whatever, ends up happening, we have a lot of choice. And I think having choice is a powerful thing in the world of investing.
I agree. Yeah, I love that. Man, it's so incredible, everything that you guys got going on, and very thankful that you took the time out to be on today. How can people get a hold of you guys?
You can check out techbuster.com. We're all over LinkedIn. I'll shout out, Taylor's active on Twitter. I think he's Mr. Jones STRs. John is the Airbnb data guy. If you want to go on TikTok or YouTube, and, we share a lot of things. All our data is public, by the way. So if you're curious, you just book a call with our team. Like, we'll literally send you a link, and like literally what we did last quarter on revenue and expenses and mortgage and like everything. You can see everything. Everything we do is as public as can be. We want to bring as much transparency to the space as possible. And I think it's something that more GPs should consider, right? Like, we do everything up front. Everything's branded and marketable and sexy, and data's in your face. And, we firmly believe in what we're doing. So if that's you, we'd love to have you if you're an accredited investor. And if you're just curious, book a call, learn more, see what the hype is about.
Love it. Yeah, guys, I highly recommend. I'm going to be booking a call. Let's just say that. But I recommend you guys do the same. And just a wealth of knowledge. The more that I get better at business and learning the mistakes that I've made in the beginning stages versus what we're learning that actually works today is data driven changes and hire-ons or reasoning behind all your decision makings. Really, that's how businesses run. That's how successful businesses are made. So
that's the thesis right here, Brandon. Like, I know not a lot of people can see my screen right now, but the whole thesis behind the name TechVestor is simply data-driven investing.
Yeah.
Right? Whether it's tools or resources or opportunities or whatever it is, we believe the world needs more data and better inferences on that data. And we believe we can help that. And the first spot we're tackling is short-term rentals.
Love it. So guys, reach out to TechVestor and reach out to the whole crew. I mean, just a wealth of knowledge. So very excited for that. Appreciate your time today, brother. It was amazing having you on. Guys, if you want to get a hold of me, you can always do so on Instagram. It's Brandon Elliott Investments. Otherwise, Facebook.com/Brandon Elliott Investor. If you guys are looking to really learn how to get the banks to say yes a hell of a lot more and get up to $500,000 every 6 months at 0% interest, you can check out creditcounselelite.com. Getting a big stack of these. So getting a big stack of these 0% interest, learning how to do so that you can start, grow, scale your investing and be able to do it safely and securely. Check out creditcounselelite.com. You can get a second opinion from us and be able to hear more about our journey and what you got going on. So with that being said, make sure you hit the subscribe button to Ready, Set, Go Real Estate Investing Podcast. If you haven't already, what are you waiting for? Do so right now and leave that 5-star review. Greatly appreciate all the love, all the support lately. You guys are amazing. Means the world to me. And we'll catch you guys on the next one. Till next time, God bless.
This has been another episode of Ready, Set, Go Real Estate Investing Podcast, brought to you by Brandon Elliott. For more information, please visit BrandonElliottInvestments.com. Also, please don't forget to like, share, and leave a comment below. Thanks again for joining.